KK, good morning and thank you for joining us. KK, holiday season is over, but where are all the bulls? Volumes have dried up, flows are not there, and markets are down for 4 days on the trot.
Good morning, Nikunj. But the fact remains that if you look at over the last 3 months, our markets have gone up by almost 7-8% on the Nifty, and your mid-cap, small-cap indices have moved up by almost 15-20%, with many stocks in the mid-cap market moving up by more than 50 to 70%. So on the back of a very strong rally when we are entering into the results season, the expectations are that it's best to be more careful than trying to be very aggressive. Last time around when the quarterly results came, the expectations were not there and the markets were also subdued. Versus that, markets have moved up and expectations are very high. So smart money is kind of being careful as far as the domestics are concerned. And it's early days as far as FII flows are concerned. So I think these two factors, plus some uncertainty or rather this Aam Aadmi Party factor, also has created some kind of a question mark in the minds of investors, and investors are basically in a wait and watch mode rather than taking aggressive bets now.
So are you calling for a market top?
It's too early to say whether there is a market top, but it's time to be very, very bottoms up focused rather than trying to figure out how the broad markets will behave, because there has been a sharp rally and you have too many events going forward. I mean, the economy exactly is on an up. I mean, it's stable, but there is not great uptick in the economy per se. So it's best to focus on valuations and bottoms up stock picking rather than trying to do top-down investing.
KK, do you also think that the market is somewhat nervous about the IIP data for the month of November, as well as the trade data, and of course, December WPI and CPI as well, what the data entails, and more importantly, what it leads up to in terms of RBI action this month?
Yeah, rightly so. What you say that the rally has been sharp, but the data has not been supportive. So this rally has been basically a rally led on hopes, and so you will have these periods of introspection where you possibly feel that the markets have run ahead of the immediate fundamentals. I think we are through that phase as of now, and that's why that is the reason why we are seeing a kind of consolidation or maybe a small downtick for the last 4-5 days. And you have the result season coming ahead, and you are not too sure whether the results will be supportive of the sharp rally which has happened.
So are you making a case that after Q2 results we got a result surprise, after Q3 numbers we could be in for a result disappointment, and if yes, what could be the extent of market adjustment post Q3 numbers?
Sorry, I think I didn't catch your question in the first half. Can you just repeat the question?
Sure, no problem. My question is that now that you are making a case for a Q3 result disappointment, what could be the market adjustment post Q3 numbers?
I'm not saying there will be result disappointment. What I'm saying is that the fact remains that whether the results are supportive of the prices which are there. And what I would say is that it would be very, very stock specific. For example, there have been positive surprises in some of the results in the second quarter. And if those same positive surprises continue for some of these stocks in the third quarter, then there will be those stocks will continue to rise, whether it is a counter like Divi's Laboratories or whether it is Aurobindo Pharma or a federal bank which gave positive surprises in the second quarter. So what's going to happen is that investors would be keenly watching the individual results, whether they are in trend with the earlier second quarter numbers, and accordingly will be reacting. So I think it's better to say that it will be very, very stock specific reaction to results rather than on a broad market basis. Similarly, you look at there has been so much of negativity as far as public sector banks are concerned. But if you look at your post second quarter numbers, most of the public sector banks have held or even moved up, and almost 20-25% returns most of the large PSU banks have given in the last 3 months. So there is a question, okay, results may be bad, but maybe it's all in the valuation. So I think it's going to be a period of adjustment where you would see how stocks are reacting post the results.
KK, what's the sense that you're getting about Infosys, the stock going in weak into its earnings on Friday? What's causing more nervousness, the company's performance or top-level exits?
See, Infosys had a good run in the last 2-3 months, and always before the result there are expectations either way, and there have been quite a few top management changes. So investors are expectantly waiting in terms of what kind of guidance is for the coming quarter and the way forward as far as the strength of the various business segments is concerned. So it's not surprising that there is some element of volatility in the counter before the results. There is huge amount of expectations from this stock in the coming coming few years, and so it's natural for investors to be trading in this counter just before the results. But having said that, we believe that amongst the large cap IT pack, Infy should deliver superior returns in the coming 1 year.
What is the future of power stocks? Because the new power policy adopted by Aam Aadmi Party certainly has set the cat amongst the pigeons.
Yeah, there's a lot of nervousness which has come into the system post the surprise success of Aam Aadmi Party, and they have initiated their exercise on giving free water and free electricity or subsidized water, subsidized electricity, etc. And there are other states also which seem to be clamoring for similar kind of dispensations if that is what the people want. So there are concerns that the surprise success of the Aam Aadmi Party, will it derail the reform process as far as the power sector is concerned? But it's too early, it's very early days, and I would be careful, but I wouldn't say that power stocks are going to be under tremendous pressure because of this.
Would you be a buyer in, let's say, a franchise like Tata Power or Reliance Infra, for that matter, NTPC stocks which have suffered because of sentiment, not because of perception, not because of absolute reality or earning downgrade?
See, many of these stocks have their own independent challenges, but of late things have been improving in the sector, and I believe that going forward also these sectors will continue to benefit because of the policy changes, etc. So these are temporary aberrations as far as the negative is concerned because of the subsidies, etc. Given by the Delhi government. So in a longer term basis, these are utilities which will deliver decent returns. NTPC at current prices should offer decent returns to investors.
What about names like JSW Steel? Couple of metal names have been showing traction off late. What are your picks?
We have been positive on JSW Steel because the domestic realizations are stable, and also because of the strong export capabilities that they have developed. So that's one stock which could deliver decent returns going forward. In fact, Tisco also has delivered decent returns in the last 3-4 months, and if Chorus continues to deliver going forward, then from here also this could be another stock to look at.
KK, we like it, we don't like it. Equity markets, they often follow a cycle, and the cycle which has made money in last 2 years is quality. Do you think that cycle will roll over to 2014 as well, or now it's time to switch? It's time to switch out of quality, maybe go to B-rung, stay with good companies but ignore the large caps?
See, quality will always deliver over any time frames. So as far as quality is concerned, whether it is large cap, mid cap or small cap, ultimately that is what delivers. And quality is one part of it, but at what valuations you buy quality stock is also important. Having said that, yes, large caps have delivered excellent return. Have delivered good returns in the last few years, and of late it's only the small cap and mid caps have caught up. So my sense is that this year should be a year of mid caps and small caps, but within that obviously you need to be very strongly focused on quality and the valuation. So it's going to be a very much a bottoms up market stock picking as far as mid cap, small caps are concerned, rather than just buying into the stocks.
Your high risk, high return ideas for 2014, where for the moment it's difficult to make a constructive case, but you're confident that somewhere in 2014 the cycle for that company or for that business will reverse?
Sorry, I think the transmission got lost. Can you just repeat the question?
No problems. I'm just trying to understand from you as a house, what are your high risk, high return ideas for 2014, where for the moment it's difficult to make a fundamental case, but in the second half of this calendar year, you're confident that that business, that group or that company will turn around and numbers will start showing in?
First of all, I think this concept of high risk, high return, I'm not too sure whether that's the concept investors should follow. I think it's best to follow a conservative thought process of investing rather than going for high risk, high return thought process. Having said that, we believe that IT will continue to deliver positive returns. So many of the mid caps in IT should deliver positive returns. That's the segment where we are comfortable with, because there is a large event in between, which is your general elections, and we don't know what can happen over there and how things will pan out post that. But the visibility for IT companies seems to be strong, so we believe that many of the mid-cap IT companies could give you good returns, and there could be a positive change in their discounting. So that's one segment. The other segment that we are very comfortable with is the pharma pack, where again there is a lot of mid-cap companies which have delivered good returns, and where we believe that there is a possibility of further re-rating of many of the stocks in that segment. So that's two segments where we believe that that could give positive returns in the coming 1 year.
You've talked about some of the IT names, in particular Infosys, but what's the sense that you're getting about the other majors, HCL Technologies, TCS, as well as Wipro? How are they going to stack up as opposed to Infosys? Because this is seasonally a weak quarter, and there is expectation running of a muted constant currency growth as well this quarter.
See, among the large cap ITs, apart from Infosys, we are very positive on the prospects for Wipro. Wipro has delivered a positive surprise in the previous quarter, and we believe that it's on an uptick and in terms of its delivery of numbers. So that's the other large cap stock that we are preferring in the IT pack. And if you go slightly below that, then we believe that Tech Mahindra should again be the stock to look out for in terms of numbers and in terms of a re-rating of the stock further.
KK, what has worked really well for you last year is Tech Mahindra, great call. What has not worked is Kane. Are you still bullish on Kane? Because here's a company where valuations are extremely attractive, the management is in process of conducting a buyback, but markets are ignoring both the buyback and attractive valuations.
Yes, we believe that Kane should deliver positive returns over the time frame. So far it has not yet delivered, but the management is putting its money where it believes in, and to this expected buyback. I think that should instill a lot of confidence in the minds of investors. And this overhang which is there, which is the expected selling by the UK-based Kane PLC. So once that is behind the company, I'm sure this stock should get its rightful valuation, and this could be a decent, this stock should give you decent returns in the coming year.
To allocate, let's say, 7 to 8% of your total portfolio into Kane, and between Kane and Reliance, which is a better stock to own for next 2 to 3 years?
I think both of them should give better returns, but having said that, I think Reliance with its various CapExes going on stream, I think that should be a stock where probably you can have a slightly higher allocation within the oil and gas space.
A lot of viewers who are watching this show, they are not active traders, they are not active investors. For someone who wants to be a passive investor for 2014, how should a passive investor invest? Buy the Nifty, buy the mid-cap index, or buy stocks and simply sit on it? If yes, which stocks?
You see, for a passive investor, it's one who doesn't regularly monitor the market. I think the best vehicle to invest in is through mutual funds. I think that's the vehicle whereby they can hope to make a decent return. So I think a mix of a large cap fund and a mid cap fund would be the best place for a passive investor who doesn't monitor the markets on a regular basis. direct investing, be it passive investors or be it even active investors, is becoming difficult by the day. The amount of information, knowledge which is flowing within the system is humongous, and for an individual to be able to monitor all those information and be able to take decisions is really difficult. So I think it is best that individual investors should leave that job to the experts and invest through the mutual fund route.
KK, what's the sense that you're getting about the realty space? Because last month has turned out to be a good series for real estate names. Of late, you are seeing some trading moves as well. Would it be wise enough to put in money in any of these names, or steer clear because this is just a trading bout that one is seeing?
The realty space, yes, there are challenges with many companies in terms of their balance sheets and in terms of demand in various segments. So per se, the whole space seems to be under a lot of challenge. Whether companies which are more focused on the NCR region, and of late we are also seeing that companies which are focused on the Bangalore space also seems to be having challenges. So generally the question of demand at these high elevated prices is there. So having said that, it's best for investors to be very, very careful as far as investing in realty space is concerned. There can be some pockets, companies like maybe an Oberoi, which has got very strong balance sheets and which are focused on specific segments of the market that could be looked at. But broadly, I think that's a space which I believe will continue to underperform for some more time.
Okay, KK, wonderful to have you back on ET Now, and I certainly look forward to much more of you in 2014.